Hey everyone, welcome back to Corporate Decoder, the place where we crack open corporate documents to see if the numbers add up or if it is just smoke and mirrors. Today we're looking at Inspire Veterinary Partners and a rather interesting filing from December 2025. So, what is this filing about? Well, it is a Form 8K, which basically means something significant has happened at Inspire Veterinary Partners that the public needs to know about right away. Think of it as a public announcement of major corporate events. And what exactly happened? It looks like they entered into a new agreement. Before we dive in, if you love getting these no-nonsense breakdowns of corporate filings, make sure you are subscribed, and hey, we've got a growing community on Discord where we chat about these things even further. The link is in the description below. Alright, so on the 12th of December of 2025, Inspire Veterinary Partners Inc., which we'll just call the company from now on for simplicity, signed a consulting agreement with a firm called 622 Capital LLC. This isn't just any consulting gig. 622 Capital is going to be helping the company find business development opportunities, specifically focusing on financing. Think of it as bringing in a specialist to help them raise money or find investors. Now here is where it gets really interesting with companies like this. What did the company give in return for these services? Not cash, at least not entirely. They agreed to issue a whopping 945,000,000 shares of their Class A common stock to 622 Capital. That is a significant chunk. They've already handed over 330,000 shares, and the rest, another 615,000 shares, will be given out very soon after they sign the deal. This is a common way for smaller or growing companies to pay for services when cash might be tight or when they want to incentivize partners. These shares are being issued under their 2022 Equity Incentive Plan. And importantly for investors, they've been registered. This means they are officially cleared for issuance and can be traded. The agreement itself sounds pretty standard, with usual clauses for things like how long it lasts, what each party promises, and how they'll handle secret information. Now, who is Inspire Veterinary Partners? They are a company that operates veterinary practices. They're in the business of animal health, and their stock is traded on the Nasdaq Capital Market under the ticker symbol the Forthet. The fact that they are issuing a large number of shares often signals a few things. 1, they might be trying to grow rapidly and need partners for that growth. 2, they might be a bit cash-strapped and are using stock as currency. This filing also tells us that Inspire Veterinary Partners identifies as an emerging growth company. This is important because it means they have some flexibility in how and when they report certain financial information. Particularly new accounting standards, they've checked the box that says they will not be using the extended transition period for new or revised accounting rules. This suggests they're aiming to present their financials in line with current standards, which can be a positive sign for transparency. They're trading their common stock, which has a very low par value of just 1/10 of a cent per S-hair. This low par value is typical for companies that have split their stock multiple times or have a very large number of outstanding shares. When a company issues millions of new shares like this, it is crucial for investors to understand if it is diluting their ownership stake significantly. If you own 1% of the company and they issue 9.45 million new shares, your ownership percentage will decrease unless you buy more shares to keep up. The filing also lists the exhibits. The most important one here is Exhibit 10.1, which is the consulting agreement itself. This is where you'd find all the nitty-gritty details of the deal. They also include the cover page in an interactive data format, which is standard for modern SEC filings. Now, while this filing focuses on a new material agreement, which means a deal that is important to the company's business, it doesn't include detailed financial statements like a quarterly or annual report would. This means we can't really dig into their revenue, profits, or losses from this specific document. However, the significant stock issuance to a consultant definitely warrants a look at their overall financial health and their strategy for growth. Companies that rely heavily on stock compensation for services might be in a growth phase but could also be facing challenges in generating enough cash to pay for everything they need. The report is signed by Kimball Carr, who is the President and Chief Executive Officer. This tells us the top brass is aware of and approving this arrangement. Okay, so let's put on our Warren Buffett hat and look at the bigger picture here. Inspire Veterinary Partners is engaging in a strategy to fuel its growth, likely in business development and financing by issuing a substantial amount of stock. While this can be an effective way to bring in expertise and potentially secure future funding without upfront cash, it is a double-edged sword. The company is clearly in a phase where they are prioritizing expansion and presumably future value creation. Using equity as a key tool, the large number of shares being issued, over 9 million, could significantly dilute existing shareholders by evening the ownership stakes. This means that each existing share may represent a smaller piece of the overall company after this issuance. It is a trade. off between bringing in valuable services and potentially reducing the value of each individual share if the company's performance doesn't significantly improve. For investors, the key question becomes whether this deal will genuinely lead to increased revenue, better access to capital, or other strategic advantages that outweigh the dilution. Without the actual financial statements and a deeper dive into their past performance, it is hard to say for sure. We'd want to see how this new financing expertise translates into tangible results for Inspire Veterinary partners. Are they poised for significant expansion, or is this a sign of underlying financial pressures? The focus on bringing in business development and financing expertise suggests a strategic move to unlock new avenues for growth, but the execution will be everything. We need to watch how these newly issued shares impact their stock price and their ability to secure future capital. Alright, that is our breakdown of this Inspire Veterinary Partners filing. What is your take on this strategy of using stock to pay for consulting services? Do you think it is a smart move for growth or a sign of weakness? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives like this. Don't forget to check out our Discord community linked in the description. Thanks for watching, and we'll see you in the next one.